What's up, guys? We're about to go through a condensed home buying seminar here. We're going to cover the whole process, a little bit of an overview. We're not going to get super in depth throughout the way, so I hope you find value here. And if there's anything that you want me to go deeper in, obviously just reach out to me and I would love to explain anything in further detail. So, home buying. Step number one is you need to get pre-approved for your loan. This is assuming that you're not purchasing all cash. What goes into this is you're gonna talk to either a lender or a mortgage broker, and they're gonna give you a list of all the financial documents that they need from you. It'll be 2 years of tax returns, some bank statements, all sorts of other stuff. And they're gonna analyze your financial situation, and then they will tell you what type of loan they are willing to give you. And just a few quick notes here, especially for first-time home buyers. You can have parents or other family members contribute money towards the down payment if that's gonna help you out here. And you can also have parents co-sign on the loan for you to help you get pre-approved for a bigger amount. So just know that if that is something that is available to you, that can happen here. Okay, so the lender is most likely going to show you a 30-year fixed product. And what that means is that it's gonna be, your interest rate is gonna be locked for 30 years. And that is pretty attractive because especially right now, interest rates are pretty low. So if we can lock a low rate for 30 years, that's amazing because 30 years from now, they will likely be a good amount higher. 5 years from now, they'll likely be a good amount higher. Here's the one thing though about being a first-time home buyer. The first place you buy is most likely not your forever home that you're gonna be living in for 30 years. You're probably gonna be in your home for 5 to 7 years. So while this is a very just stable, good product, something to consider here and to talk about with your lender or mortgage broker are ARMs, which stands for Adjustable Rate Mortgage. So what this is a product that is going to have your interest rate locked for a shorter amount of time, like a 10-1 ARM, for example. A 10-1 ARM has your interest rate locked for 10 years, and then after that 10-year period, if you still have the loan, it will reset to current interest rates annually, so every year. That's what this one means there. And so since you're not locking the rate for 30 years, the bank is gonna offer you a lower interest rate because they're not taking into account that they might have to deal with this rate for 30 years. So that's why for first-time homebuyers, it might make more sense for you to consider an ARM compared to a 30-year fixed. Your interest rate will be lower, which means that your mortgage payments will be lower. And then you're not penalized. Like, let's say that you're planning on keeping it for less than 10 years, but year 10 comes around and you definitely want to keep living there. It's not that you're penalized or anything like that for keeping your mortgage. It's just it will reset to whatever current rates are at that time, which 10 years from now are likely to be higher. So all stuff worth keeping in mind. And then it's really important that you work with your lender or mortgage broker on determining what you're comfortable paying per month, because they're gonna give you a max approval. But that doesn't necessarily mean that you should spend that max approval amount because everyone's different with their finances. I have some clients that if the lender says, the max purchase price we can do is $900,000, I'm showing them $900,000 homes, we're writing $900,000 offers. I have other clients, like this one, for example, that was approved for 1.4, and he didn't want me to show him anything over $850,000 because he wanted to invest his money in other things as well. He didn't want to just put everything into his house. They like to take nice vacations, eat out more. So it really does come down to personal finances and budgeting. And so that's where you just really need to work with your lender or mortgage broker and see, okay, at this purchase price, putting this amount down, what does that come out on a monthly standpoint for me? And then you know more than anybody else what you're comfortable with. So definitely is worth getting all this sorted out. as step number one. You can't really go shopping until you have your budget in place. You can waste so much of your time and your real estate agent's time if you don't start with this. And then another reason why you want to start here is because let's say you go shopping and you just find your dream home, the perfect home for you. Well, odds are that other people are going to think the same thing about it, so it's going to be competitive. And if you're not pre-approved, then you can't write an offer because the seller isn't really going to consider your offer unless you have your pre-approval letter. And this process can take, sometimes there's a back and forth on getting the documents. It can take a week and change sometimes. And so you might miss the opportunity to submit your offer on your dream home if you are waiting until you're excited about a place before you go through this process. So definitely start here. Your real estate agent is going to be able to help refer you to good lenders and mortgage brokers, by the way. So definitely use them as a resource if you don't know who to talk to here. Obviously, the lower the interest rate, the better. We want to make sure they have good products for you. Okay, one last thing I wanted to get into about the pre-approval process before we move on here is that you do not need 20% down to buy real estate. So many people think that you need that, but it's just not the case. Now, the reason why people kind of have this number stuck in their head is because that generally is the benchmark that if you have 20% down or more, you don't pay what's called mortgage insurance, which is basically like an additional added fee on top of your mortgage for having a little less skin in the game than this 20% or more figure. But especially for first-time home buyers, if we're not getting like family help with the down payment, it's going to be really hard for us to come up with 20% down. And so, there can be 15% down, 10% down, 5, 3, 3.5. There are all sorts of different loan programs out there that hopefully will be able to work and find a good product for you. And something to keep in mind here too is that you're not stuck with that mortgage insurance forever. You could pay more of your loan down, a few years into it and then get out of it that way. Maybe you have a lot of equity in the property and you can refinance and get out of it that way. So there are all sorts of ways to do it. And then, even if it costs you an extra, I don't know, $100, $200 a month to pay the mortgage insurance if you don't have 20% down, that is still so worth it because you are getting in the game. You are putting the money that previously was going towards rent to pay somebody else's mortgage and get that person rich. You're now investing in your own asset that is gonna appreciate over time and you're gonna be able to cash out on that appreciation at some point. So just get in the game. Don't think you need to save up for 20%. Okay, so now that you are pre-approved, step number 2 is to find your real estate agent. So this is really important because the real estate agent is basically going to be your quarterback throughout the entire process. They're going to help facilitate the search, help facilitate showings. Once you find a place you like, put the offer strategy together, and then get you through the escrow process. So this is a really important person in the home buying process. Now, maybe you have friends who had a great experience with their realtor and you're getting referred in that way. Maybe you're finding them online, they have good reviews. Whatever the case may be, you just want to make sure that they are experienced working with clientele such as yourself. So if you're a first-time home buyer, you want to make sure that the real estate agent doesn't only work with investors, because people who work with first-time home buyers hold the hand and explain everything and go through the process in a very different way than an agent who only works with investors would. Let's make sure that they know the areas that you are interested in. If they don't know that, it's hard for them to add a lot of value and insight. So this stuff is certainly important. And then almost more important than anything is, do you like this person? Do you feel good chemistry with them? Because there are going to be moments, especially during the escrow process, where it is likely going to be stressful. And if you have a good relationship with this person and you trust this person, that's going to be much better when you find yourselves in these more stressful situations than somebody that from the get-go you didn't really trust or you just weren't vibing energetically. So definitely make sure that you get along with them, because you're going to be spending a lot of time with them and they're going to see you in your pretty stressed out states throughout this process. All right, so once you connect with the realtor, you're going to go over your budget, you're going to talk neighborhoods and property types. Again, this is where hopefully your realtor has some insight. Maybe they know that certain new developments are coming into a part of town that might boost property values more than just the normal appreciation of, Southern California or whatever. You're also going to talk property types. So are we talking condo? Are we talking single family home? Are we talking a 2 to 4 unit investment property? Your realtor will be able to kind of explain the pros and cons of each and then work with you with your budget and neighborhoods to give you just a realistic assessment of what your options are. And then you're both going to be looking for properties. So with Zillow and Trulia and all that, you're going to be seeing pretty much what your real estate agent is going to be seeing looking on the MLS. Now, there are definitely some off-market opportunities that good real estate agents will be able to get for you. If you're a first-time home buyer though, you're probably not going to find too many opportunities there, because the majority of off-market are investment properties or big luxury ones that are owned by like celebrities who don't want to put their home on the market for privacy reasons and don't want strangers coming through for open houses. So if you're a first-time home buyer, odds are that what you're seeing on Trulia and Zillow is just what your real estate agent is also going to be looking at on the MLS. So you'll send properties back and forth. I always tell my clients, look, just give me feedback. Even if you don't like the place, give me feedback. That way I can really start zeroing in better and better on what your tastes are and your preferences. So you're going to put a list together of places you want to see. You're going to go out and tour them. When you're touring them, by the way, it's always good if the listing agent is there to just be extra courteous to that person, to engage with them. The social dynamics can really go a long way if it does get like a competitive multiple offer scenario. So just something to keep in the back of your mind. All right, let's go to step number 3 of the process. This is where you find a property that you like and you want to submit an offer. Okay, so the first thing that your realtor should do when you identify a home that you want to pursue is run comparable sales. What comparable sales are is looking in the very specific geographic area that this home is, very granular with the neighborhood. Maybe the realtor knows if you cross this main street, property values go up, so we don't want to include that. This is really where your realtor's local knowledge is going to come into play. So yeah, we want to identify a tight geographic neighborhood. We want to make sure that the homes that we're comparing the listing to are approximately the same size, similar lots. If the home that you're writing an offer on has a gorgeous view, the other comparables should probably also have gorgeous views. Because the whole point of this is we want to figure out what market value of this property is, because the seller and listing agent, maybe they underpriced it relative to the market value. Maybe they overpriced it. So the list price is a factor, but much more important is figuring out what we think it's really worth that the market is dictating. The other thing that your real estate agent should do here is get you as much context as possible for what the kind of climate and competition looks like here. So we'll just write get more context. So if we run our comparable sales and it looks like their list price is right in line with market value, if I speak to the listing agent and find out that there are no other buyers that are submitting, maybe we will write your offer under list, because we're going to try to get you a deal because we have leverage, and obviously the context of the situation is really, really significant there. If it is priced accurately and there are a bunch of offers, you would be absolutely shooting yourself in the foot to start off under list price there. You're just going to go to the bottom of the pile. You might not even get a counter offer with the other offers. So that's where it really, really comes into play to have a good real estate agent who's able to develop rapport with the listing agent. Maybe they had it before, or maybe they're just developing it fresh. But either way, a good real estate agent should be able to get you a lot of context. I always ask, how many offers do you have? How many are at or above list price? Are any all cash? Is there anything in particular that the seller is looking for? That's a really, really good question to ask. Sometimes sellers want to close really fast. Sometimes sellers don't want to close fast and they need more time. Sometimes sellers need what's called a lease back, which is where after the deal closes, you as the buyer become their kind of like landlord for a week or two or however long the lease back is, to just give them a little more time to close escrow on, you know, the property that the seller is going to buy and then move. So knowing what is important to the seller really can help you write an offer that is attractive to them, which is super important in a multiple offer scenario. The other question too to ask here is the seller going to have a round of counters, or does the seller just want to put something under contract really quickly and they don't want to do any countering? Obviously, that will dictate what your initial offer strategy looks like. Okay, so now let's fast forward here. We just got your offer accepted. Excellent. So now we go through escrow. And the escrow process is what happens from accepted offer to the actual close of the deal, where you as the buyer are now the homeowner. And a whole lot happens here. This is a really, really big part of it. So the first thing that you are going to do is you're going to wire the escrow company, who's basically, the escrow company is like the middle person between buyer and seller. So you're going to wire the escrow company your earnest money deposit, also called EMD. You have 3 business days, by the way, the contract defaults. You have 3 business days to get this into the escrow company. And now what this serves as is, it's basically like the money that you have to put forward to ensure that you have some skin in the game, so you can't just, you know, abuse the terms of the contract and remove your contingencies and then kill the deal and expect to get your earnest money back. By the way, this is generally 3% of the purchase price. So escrow is going to give you the wiring instructions, and then you're going to send that in at the very beginning of the escrow process. And then the next thing that we need to get moving here are lining up your property inspections. This is really the whole point of the escrow, is it's for you to do your due diligence and learn everything you can about the property. Make sure that you are fully informed on the good, the bad, and the ugly that's coming with this property before you close escrow. Seller is also going to send you disclosures for you to review, but this is a big part of it. And so if it's a single family home, I recommend starting with your general inspection. Your general inspector is going to pop the hood and look at just about everything with the house, and then they will be able to give you recommendations on if you should get more specialized inspections. So for example, they'll go up on the roof, and if the roof is in great shape, they won't recommend getting a roofer out. But if the roof isn't in good shape, they then will. Same with foundation. They'll run moisture meters and try to see if there's moisture in the walls, which could potentially be a mold issue. The results of this are really going to help dictate if we want to get a bunch more specialized ones. The other ones that I recommend starting right off the bat, a termite inspection. Sometimes sellers will provide this for you, but if they don't, this is something that you want to do. Everything is negotiable in terms of who pays for what when problems come up, but generally sellers do take responsibility for paying for Section 1 termite work. So this is something that you just want to figure out what the damage is, what it costs, and all that, and you'll use it to negotiate a little bit later. And the third that I recommend for all single family is sewer line. So the sewer line inspection, it involves the inspector with this really specialized piece of equipment that has like a camera at the end of a snake, and they shove it all the way down the sewer line until they get to the city connection, and they're looking for breakage, root intrusion, whatever it may be. And this is one of the few things that the general inspector just doesn't have the tools to really to really look at. So that's why we want to get this specialized person out there immediately as well. It is very normal for there to be some sewer line issues. I had one recently that the whole line needed to be replaced. It was $25,000. Thank goodness my clients invested in their sewer line inspection, so then we could negotiate and we got the seller to pay for the whole thing. Again, you could start with a lot more in the initial round, but these do cost money. My general inspectors are around $350. Termite is going to be around $100. Sewer line is going to be around $250. And so that just kind of gives you a sense of what inspections cost. But like a foundation inspection is probably going to cost more because it's dealing with like engineering a little bit more. So you can line up and just get as many as you want. You as the buyer, it is completely up to you with how much you want to inspect. But I would probably start with this and not spend thousands of dollars yet on a property that you don't know if you're going to actually purchase or not, and then let this person tell us, you know, what other kind of more specialized ones that we should do. Now, if it's on a hillside, I would also include in this first round a geological inspection. We want to make sure that the soil is good so that there's not a possibility of, in a serious rainstorm, a mudslide, you know, having the like house slide down the mountain. With condos, by the way, I normally just start with the general inspection because you know, exterior wood and then the sewer line are going to be the HOA's responsibility. So normally we don't really need those with a condo. We'll just do the general inspection. And throughout this whole process, regardless of how many we do, we're racking up our list of just issues with the property. And we want to put price tags to them too, because before you remove your inspection contingency, we're going to negotiate as much as we can with the seller here. So, like I said earlier, sellers often will pay for termite damage. Sellers hopefully will feel that stuff relating to health and safety, as long as it's reasonable, that they should cover that stuff. What sellers will absolutely laugh at you about is, you know, if there's just a little cosmetic crack that has nothing to do with structural issues, or if you don't like the color on a certain wall or something like that, that the seller's not going to help cover for. But let's say there's a leak. A leak can then lead to mold. That's health and safety. Let's say there's exposed wiring, you know, or like a improperly installed outlet. That's a shock and fire hazard. You know, hopefully they'll cover that stuff. Big structural stuff, hopefully they will step up and at least help with. Some of that stuff can get really expensive, so they might not pay for all of it. You might negotiate in terms of, and see, you know, who's going to pay for how much of it. But this is a huge part of the escrow. A lot of deals fall apart here if buyer and seller can't come to terms. The process here is you're going to put your request for repair forward, and that's what you'll use to negotiate this. And now let's just take a step back and talk a little bit more about your contingencies, because those, like we were saying earlier, for you to kill the deal and get your earnest money deposit back, you have to use one of your contingencies properly here. And the most powerful one that you have is your inspection contingency. With this one, you can really just change your mind and just no longer be in love with the property. And you know, and if you want out of the deal, then if you still have this, which by the way is probably going to be around 10 days or so, your inspection contingency period, all negotiable, but generally 10 days. If you have that, you can just get out of the deal super easily. You can apply that one very, very liberally. Once you remove that, you're definitely a bit more ingrained in the deal, because the other contingencies that we have here after we get through property inspections are the appraisal contingency and then the loan contingency. Okay, so for the appraisal, your lender or the bank, they want to make sure that your purchase price is in line with market value, because if you default on your mortgage payments and then the bank forecloses, it now becomes their property that they have to sell, and they want to make sure that they're not inheriting something that was overpaid for. So they're going to send an independent third party out, and they're going to inspect the property. They're going to look at the comps the same way that we looked at comps, and hopefully they say that they agree with our purchase price. It is possible for them to think that the home is worth less than what the purchase price is, and there are a whole lot of ways that can get played out. I don't want to get too in the weeds with that right now because it gets a little technical, but just know that if it appraises at a value under what our purchase price is, if you have your appraisal contingency, that's a reason for you to kill the deal right then and there. You get your earnest money deposit back. But there are a whole lot of other things that we can do to keep you in the deal, such as maybe just increasing your down payment amount, or we could order another appraisal by switching lenders. There's all sorts of stuff, but I don't want to get too into that. And then the final contingency that we're going to have is the loan contingency. And assuming that you don't change jobs, that's super important here, guys. Do not change jobs. Even if your new job is going to pay you more money than your old one, the bank's not going to be able to include that in their calculations for you. I'm pretty sure you need at least 2 months of that income before they can factor it in. So don't do that. I've had a few clients almost do that, and I had to really talk them out of it. And even if it's a pain in the ass for your new employer, like, it's the difference of you being able to get your loan at the end of this escrow or not. They verify your employment right before issuing loan docs. So yeah, let's write that out. That's worthwhile. Don't change jobs. The other thing is don't take on any big new debts. So don't buy a new car, don't buy a new boat. Some clients, they want to pre-order online like all the furniture for their new place. I wouldn't even do that, quite frankly. You know, if you really want to do it, maybe talk very specifically with your lender, show exactly, you know, the prices and everything, but I just wouldn't do it. I would wait because everyone has worked so hard. You've invested a lot of money into this already. Even if the deal falls apart and you have your loan contingency, it costs money to inspect. That's money you don't get back if the deal closes. Your appraisal also costs money. They vary, maybe factor in like $500 for the appraisal. Those are things that no matter if the deal closes or not, you don't get those back. If you use one of your contingencies to kill the deal, you will get your 3% earnest money deposit back. But still, you know, you obviously want to purchase this home, so just make sure you're doing the right stuff with your personal finances so that the loan doesn't get screwed up. But assuming that you were good, as we get to the end of the escrow, the lender is going to give you the thumbs up. They're going to say, all right, we have looked at everything and we are ready to issue you this loan. Because your pre-approval was just them saying that we are confident that we can issue them this loan. You're going to keep your loan contingency until you get to this point where they actually give you the thumbs up that they're going to be able to issue you loan docs. They're 100% good. This happens at the end of the escrow. Once you sign loan docs, then either that same day or the next day your loan will fund, and then that's also around when you're going to wire in the remainder of your down payment. So if you're doing 20% down, you'd put 17% because you already have 3 in there. And then the next day is when it records, and this is when, you know, title transfers over to you and you are officially the new homeowner. And then I come over and we pop bottles and it is just lovely. So I hope you got a lot out of this first time home buyer kind of little seminar. We went fast, I know all that. If you have any additional questions about any of this stuff, please reach out. We love educating people, we love helping people. And yeah, thanks for watching.